All the historical data, Jim, is good. The markets have been bullish. The bears, they've thrown in the towel. Volatility is non-existent. Short bets against the VIX, they're pretty much non-existent in some ways. And yet, I feel like we were here last year, and we all know what happened in December. Is there any risk this year to a 2018-like December market swoon?
Well, there's always risk. I just don't think it's going to happen. And the fact that it happened last year makes it a little less likely that it happens this year because people are kind of on guard for it a little bit. Now, some of those statistics you just said scare me a little bit. If complacency's down, that's when these sort of things happen. But the overarching theme to me is, didn't you expect futures to be down last night when you heard all the nasty rhetoric coming from China? And they're not. They're up. I actually think there's an element to this that I find very interesting, is that as long as the China thing still keeps extending, the Fed perceives their job to plan for worst case scenario. And that's what, so they're not going to tighten rates despite the fact that the economy is chugging along, as you said as well. And that's why I think that we see a little bit of a steepening curve right now, too, because the market feels probably that rates are a little lower than they should be based on the current macroeconomic condition.
Yeah, listen, as market strategist my friend Raul Paul points out in a tweet over the weekend, he said the short position against the VIX is basically the largest that he can remember, maybe in all of history. So what does that tell you about the way that people are setting up into this market where everything really, Jim, has simply been on one side of that boat?
Right. Well, there's no question in my mind that that belongs on the negative side of the ledger of things that could cause things to tumble. So I don't like that. There's things on the positive side that outweigh it, particularly the fact that the Fed has become very active again, which what is certainly not QE by any definition of it, but they've increased their balance sheet by $280 billion in the last 10 weeks. To me, it seems like the Fed's very accommodative. And I hate to sound like, a broken record, but to me, the biggest deal is the fact that the Fed and all three central banks are willing to throw money at the problem. And when you look at where that money, well, the problems they perceive and where that money is going to end up, the U.S. stock market is a pretty good place for it. So, yes, I don't like the fact that there's some complacency and people are selling the VIX, but I do like the rest of the story.
Yeah, I'm going to read my viewers' minds, which is they're thinking, hey, Brian, last year the Fed was hawkish. The yield curve was starting to flatten. We had some troubling economic data. None of that exists this year. And according, what you just said, basically, we're seeing an easing or at least an accommodative Federal Reserve. But I just sometimes, Jim, you and I have talked about it, and I don't want to be a broken record either, which is that this kind of market structure where everybody's crowded into all these pretty much the same stocks and the same ETFs, I just wonder if it's just almost too perfect in some ways.
I know, but like you and I, we've lived through two separate things where everybody got into a really crowded trade. We saw it in the tech bubble. We saw it in the real estate bubble. And anecdotally, at some point, you saw everybody talking about how they've leveraged up and what could possibly go wrong. Why would I be in any sort of bonds when I can get 12% a year in stocks? I don't hear that as much. This is more of a climb a wall of worry kind of trade, it seems like to me, despite the fact that we've seen some shorts in VIX as of lately. But I don't mind the rally as much when I hear people talk negatively about it. I like it more that way.
Okay, so you think we do follow history and we end the year higher than we are now?
That's my belief. I think that we're still good in the short term. I've seen no price action that contradicts it. The fact 30-35, when we went above that in the S&P, to me that was the start of the new bull move. Now that's 4% ago. So I think that we could trade a little bit in that range from a broader standpoint, but I still think higher is the way to go, and I'm still going to stay positioned for that.
Well,